Good evening, everyone. This is Rajendran here, joining from Market Calls. And today's session, what we are going to talk about is we're going to talk about options execution using TradingView. Right? TradingView doesn't support options. However, what we are going to do here is we're going to have a module, or we're going to understand the module, how we can use that module to analyze the charts of spot or futures, and how we can execute the same in options with a broker account using Algomojo is what we're going to look through that. Not only with the Algomojo, we can use it for any other broker also. So provided if you have the right module in place. So I'm going to log into one of my test module, Angel account, an.algomojo.com. I'm going to log in with Angel account here. Now, once I logged in, I'm going to go to the AM library section, which contains all the modules. So one among the module is the TradingView module section. Here you can find Super Trend Futures to Options module. So let me go and download it for the Angel broking. So here you can find the version 5 code. Let me copy this. And let me come back here and I'll add the sample modules. This is a sample module. Let's try to understand the module piece by piece because it has various modules over here. Okay. For example, I'm having block one. Block one contains API and Algomojo input controls. So what are API controls? API controls are like the API key, API secret key, what is the strategy name, and what is the underlying symbol that I'm going to use. I'm going to use either Nifty or Nifty future. Maybe a Bank Nifty or Bank Nifty future. And what is the expiry date? Now, why this expiry date is mandatory is like this expiry date is used primarily to build the option symbol. So we're going to build the option symbol whenever the buy signal is going to happen. We're going to build the option symbol. Let's say I want to buy a call or I want to sell a put option. So when the signal is happening, I want to calculate at that time what is at the money, what is in the money, or what is even out of the money. So based on that, I'm going to execute my trades. So strike interval, again, strike interval also used to determine what is the at the money option. So the strike interval is the minimum difference between two immediate strike price. For Nifty, it is 50, and for Bank Nifty, it is 100. So lot size also one can define over here, and offset call option and offset put option, two different variables. I'm just taking as an input control. If the offset is 0, means we are accepting at the money option. If the offset is, let's say, if it is 2 plus 2, means we are buying cheaper out of the money option, 2 strike wide. If I'm making plus 4, that means what? I'm trying to buy 4 strike wide out of the money options. Let's take a simple example here. I'm going to pull up the whiteboard. So here is the whiteboard here. Assume that last traded price, as on last Friday closing, it is like, as on today's closing, it is 17,624 is the spot. 17,624. 624 is the spot. So if I say offset equal to 0, it always look for a nearest strike price. It always look for an at the money strike price, at the money call option or at the money put option. At the money call option or put option, both are more or less same only. It narrows down to 17,600, the nearest strike price. And if the offset is going to be positive, let's say something like Nifty, 2 strike wide, then it is considered as a 2 strike OTM option. For OTM call option, it is going to be 17,600 plus 2 is the out of the money multiplied by the multiplier. So multiplier is the strike interval. So which brings to 17,700. This is for the call option. Likewise, for the put option also. For put option, the calculation is going to be different. It's still 2 only, but 2 strike option. Here the calculation goes like this: 17,600 minus 2 into 550 is going to be 17,500 option over here. So anonymous certainty, I mean, Pratik is asking, does it revise the position as the trade goes in favor? Like I have 17,500 CE, and if 50 moves 300 points up, I want to revise my position from 17,500 to 17,800 call option. See, of course, not revising may not be a wise idea. Maybe it might reduce the risk, but we may have to compensate on the profitability also. If in case we're going to do like that. So it doesn't revise us the position. Okay, so one signal trade, one signal, I want to take only one trade only. That is what the example that we're going to see. However, if you want to build, like you want to revise your position, then you have to build your revision condition also. Okay, in today's session, we are not going to build any revision condition. We're going to see the basics of the operation of the option execution ideas and the modules, and how we can build any kind of strategy, how we can fit into that strategy in a very easier manner. That also I'm going to explain that. All right, so we're not going to see any of the revisions over here. And likewise, if the offset value is going to be, let's say, -4, then it becomes in the money option, in the money CE. In the money CE goes like this: 17,600 minus 4 into 50, like 17,400 option, 400 call option. Likewise, if the offset is going to be -4 for the put option, it's going to be in the money put option. That means 17,600 plus 4 into 50. So that becomes 17,800 put option. So this is how the calculation of the options from the spot. Okay, so we're going to look through the indications. There's a couple of information that we're going to look through that. So this is how the offset works. So let me go back to the module. Maybe I'll zoom it out a little bit so that it is made a little bit visible also. So exchange, it's always going to be NFO only, Nifty futures and options. And the quantity is going to be 1. It is in terms of lot size. And variety, generally we're going to use normal only, NRML. And not NRML, but this is a normal regular order. It's not a stop loss order. It's not an aftermarket order. It is just a regular order. And order type, generally only market order only it is recommended. We cannot use anything else. And odd option type, so the type of order, it can be a carry forward order. It is also called as an NRML order. Or there is also a selection has been given for intraday order placement. Of course, limit order cannot be implemented at all because we don't know the option price, number one thing. And number two, Tradingview is more of a one-way communication. Only Tradingview can communicate to the Algo platform. Algo platform there is no provision for any of the platform to communicate back to Tradingview. Right? So as I said, Tradingview is more of a closed box with a one-way communication. Reverse communication to Tradingview is not at all possible. So we can only send a signal. So other parties should understand, and maybe other side that there should be some sort of an intelligent mechanism can be built on the other side. But Tradingview can only alert with a webhook. Nothing much beyond that is possible in Tradingview. All right, so these are regular controls, which is primarily more related to order related, strike price related, expiry related, what symbol related, and API key, API secret key, which always you can find it from the trading terminal. You can go to the My API section. From here, you can get the API key and API secret key. Now this is block 1, and block 1 also contains enable. Can trade only long only, and you can also trade only short only also. So here talking about the signals, here we have two kinds of signal. One is an buy signal. So buy signal, what we will do is we always take a long call if the open position is 0. If the open position is 0, or if there is no open position. If there is no open position. If buy signal is there, we will first exit the put option, and also we will take a long call if already open position exists. If already a short position is running, or open position is negative, open position is running negative, some negative position is running there. In that case, if there is negative position, means I'm already holding some put option. So I will close the put option and I will take a long call option. Likewise, sell signal. If there's a sell signal, we will take a long put option if open position is going to be 0. If open position is going to be 0. Or if sell signal is happening, then I will exit my call position. I always exit my previous position, and I will take a long put option if open position is already running positive, means I'm already holding some long position greater than 0. Okay, so that is the thing that we are going to do in this particular session. It's going to be plain vanilla, very simple thing. Anything more you want, you have to add more and more conditions only. Now talking about it, so here this is where I'm just calculating the from the spot price or future price. I'm trying to calculate the at the money, in the money, out of money options based upon whatever the offset interval has been provided. Right, call option offset or put option offset. So we use it to derive the strike price, and this strike price we are calculating for each and every bar. So followed by that, we're also having a backtesting module. You know, for what purpose we use the backtesting module? Generally, we use this backtesting module for positional trading strategies, so that whenever we are starting the alert for the very first time, we will always start the we'll start with that particular day's settings, so that first signal always starts with any open position. So that first trade, see, whenever the first trade is happening, there should be no open position, right? So that it always take either a long call or it will take a long put. If the backtesting settings are not done properly, maybe it will continue with the existing position. So you may end up getting a wrong orders also. Along with the long call, it will try to sell a put option, which you don't have. Or you might end up getting an sell signal, first of all, where you might end up getting an selling call options, which you don't have that position. And the long put option is the actual position we have to take. So backtesting setting is very, very important when implementing the strategy, so that we test whenever we are putting any positional trading strategy, or whenever I'm executing for the very first time, I have to set the backtesting settings. For example, let me add the strategy here. I'll add it to the chart. Let me go and add it to the chart. Yep. So if I go to the settings, if I'm starting today, assume that if I'm starting today, let's say I'm running on a 5-minute scale. If I would have starting today, so today there has been 2 signals happened, but see that first signal for the day, it is taking a long call also. It is trying to exit the old long put option also. Means it is trying to exit the put option, which I don't want to have. So if I am starting today, what I will do is before the market start, I will set the backtesting as today's current month and current day and current year as well. Now, once I'm done with the settings, it is pretty much easy. Now you can see that the first trade is always a long call. Where a subsequent trade onwards, it will start closing out the position. You can see that it taking a long put. Before that, it is also closing the long call option as well. So the sanity is maintained in this case. First trade always take either a long call or a long short, rather than unwantedly taking a exit position of the call option or a put option. Right. So next very important thing here is like in this module, we're also having risk control modules where this is primarily used for calculating the stop loss target, all those input controls we are having. And what is the tick size? ATR based stop loss in case somebody want to fix, we are also providing a ATR based multiplier and length as well. And then we have a block 3. Block 3 is the most important one. This is where our trading strategy needs to be fit in. So here I'm having a super trend strategy. I'll also show you how to use this, how you can fit in your own strategies, how you can fit your own strategies here. I'm also going to explain that. And then block 3 module. So block 3 module is where the strategy ends. So all your strategy has to be coded only in this block only. Very simple and very plain vanilla. And rest everything is like block 4. Block 4 contains intraday functions and buy and sell signal mapping. So basically, we'll be having a buy signal and we'll be having a sell signal. That buy and sell signal has to be mapped over here. In my case, already it's mapped. I'm already using the variable buy signal, sell signal. If you are using some other variables, then those variables have to be mapped over here properly. Always it has to be connected to the buy signal and sell signal. Maybe if in case you are using, let's say, for example, I'm just saying here you are saying like long condition, and here you are using short condition over here. Here I'm using a long condition for buy signal and sell signal. Instead of sell signal, I'm using short condition. In that case, that long condition has to be mapped with buy signal and short condition need to be mapped with sell signal. Okay. So ideally this buy signal and sell signal is what used as an attribute or variable to collect the buy and sell signal, and it will be feed to Algomojo as an alert. So that is how the module itself designed. So that is why I was just saying like if at all you are having a long shot to be mapped, you have to remove the comments. So these comments need to be removed if it is required. Now in this example, it is not required. So I'm just keeping it as it is. But if you are having different variables like long condition, short condition, or any other variables, you have to remove the comments from here. And then rest everything is like intraday controls. Now here is where the main thing, here is where we are framing the symbol, what symbol to trade. We are framing the symbol. So I'm using value whenever the buy signal is getting generated, what is my strike option? I mean, what is my call strike? I am noticing that option exactly when the signal is getting triggered. You see, this buy is nothing but the buy signal. Buy signal, I'm just equating to buy. So whenever the buy is getting triggered, what is my strike price? Likewise, I'm also noting down whenever the sell signal is getting triggered, at that time, what is my put option strike price? So based upon in the money or out of money, whatever the offset value you had decided, that strike price will be stored over here. And here we are also replacing a couple of values so that we can accommodate to track the signals based on spot or signals based on futures, current month futures or next month futures. So that is what the mechanism is going on here. Finally, I am deriving my option symbol based on my broker's symbol. So broker's option symbol varies for different broker. Even some broker, they will have a different symbol for weekly option, and they'll be having a different symbol for the monthly option also. Accordingly, the option symbol has been framed. So final output of the trade symbol CE and trade symbol PE contains the option order need to be punched. So here I'm also having an initial declaration, and I'm also running if the buy condition is triggering, then by that time what needs to be bought, what is the symbol call option, what put option need to be exited. If at all, if the TSL is hit, then what does the call option need to be exited? Everything I'm just noticing down over here. Likewise, when the sell signal is running, when the sell signal is continuing, what should be the put option symbol need to be bought exactly when the sell signal is happening. And likewise, what call symbol need to be exited. And what is the, if at all the square of time is reached, right? So our take profit, our stop loss is reached, what put option symbol need to be exited? So I'm just noticing down over here. I'm just taking a copy of that. And finally, I'm configuring the message. Long call is for going for a long, for that particular option symbol, we'll be taking a long call. Exit call will exit the position. Square of call also will exit the position. But the thing is, like, the square of module is primarily used when intraday time, exit time is reached. When the intraday time is reached, so we have to square off the position. If long positions are running, I will take a square call, SQ call. If sell signal is running, I want to close out the sell position, then SQ put option will be used, right? So finally, all those intraday controls are done. And finally, here is where the execution module is happening. So where I'm just looking into all the possibilities. So means the possibilities that we spoken over here: buy signal, and if there is no position, what to do? Buy signal, and if there is a position, what to do? Sell signal, if there is no position, what to do? Sell signal, if there is no open position, then what need to be done? So here, remember, we are looking out for only buy and sell only. But if your strategy is having buy, sell, short, and cover, once again, you have to look through all the possible conditions. So here we have 4 combinations: 1, 2, and 3, and 4. So all the 4 combinations, I also brought it down over here as well. So this is a combination 1, fresh buy position if there is no open position. Then we will take only a long call only. We will take a long call. Alert message, I'm assigning it to long call. If it is only sell, there is no open position, then I'm assigning a long put option. If buy signal is happening and the short position is running, so I'm closing my put using strategy close. Okay, and likewise, I'm also using a long call, and I'm just closing out the long call over here. And likewise, what I'm doing here, I'm also exiting the old call option and entering a fresh put position. If sell signal is happening and long positions are running, I'm just doing the same thing over here. Next to that, if it is only long only, then what needs to be done? If there is no position, what to be done? If there is already a position is there, what need to be done is what I had coded over here. Likewise, for short only also, I had done the similar thing. So for short only is nothing but what? If there is a sell signal or short signal, we will close the position. If already positions are running, if buy positions are already running, we will close it out. Or if sell position is happening, it's going to be a fresh short put position. So we'll try to take a long put option. And if intraday condition, if intraday timing is reached, right? So we will square it off if the intraday session is getting over and the long positions are running. So I will close the position exactly when the long square off is getting triggered. And likewise, I will square off the short square off. I'll try to square it off when already positions are running negative. I will try to close out the short position exactly at the square of timing. When the square of timing is reached, I will try to close out the position. All the position, I'll try to square it off. And finally, we are also plotting the target and stop loss as well, which we already know that. And we are also having a dashboard. So here is a dashboard, a sample dashboard. So we are using a table function for that. So table function, and we are setting the text for that corresponding message. I'm also checking out if long signal is continuing, then what text need to be displayed. So for example, if you could see here, there's a dashboard over here. Right now, short signal is continuing. So if the short signal is continuing, then it will try to say like exit call. So what call need to be exited, or what call has been exited when the last signal happened, and what strike price, which strike price of long put option taken. It tracks the recent signal symbols. It tracks over here. Now let's say if I want to align my own strategy. So I'm going to talk about a very interesting strategy called a half trend. Maybe you might know already about this. So what I'm going to do here is I'm going to keep a copy of this code. I'm going to open it, and then I'm going to put it in a notepad. Now I'm going to show you how it is easy to bring any strategy into TradingView. Let's say I'm going to open a strategy called half trend. First, I'll save the script. I'll save the script under the, this is going to be Angel 1 options module. I'm going to save it under Feb 2022, day 11, Super and Futures options module, Angel broking. Control I. I'm going to open a very interesting module called half trend. Half trend. So here is a half trend strategy. Anyways, I'll remove all the blocks and I'll keep only the half trend alone. All right. Half trend. Yeah, here is a sample half trend strategy. Let me also save the strategy here. I'm going to save the strategy under the name Feb 22, day 11, half trend. All right. So let me save the code. So this is a very interesting strategy, though. It is better than super trend. In fact, it removes the sideways market most of the time, and it's highly workable on a 15-minute scale. So let me add the strategy here, plain vanilla. If I'm going to run this strategy alone, look at the equity curve. The equity curve is pretty decent. It has a reasonable win rate, 41%, because it's a trend following system. So win rate is a reasonable one. Profit factor is 1.48. It's a recent returns. Decent returns and decent equity curve. Look at the equity curve here. So obviously, if I look into the performance summary, I can say like this is a reasonable trading system. If I'm looking into the number of large winning trades or largest losing trades, and the average number of winning trades and average number of losing trades. So overall, the numbers are looking pretty decent over here. And not only that, if I look into the Sharpe ratio is not that impressive, but Sortino ratio is super impressive, 2.48. 2.48 is definitely an strategy with controlled losses. That's what it means. Controlled smooth losses. Sharpe ratio takes into account of not only losses, but also the profits also. So what Sharpe ratio says is like it has a smooth equity curve. Returns are smooth, risk is also smooth. That's what Sharpe ratio talks about. Whereas Sortino ratio talks about only about losses. How smoother the losses are. Bigger the number, smoother the losses. Lesser the number, maybe rough losses, you can anticipate sudden surprise losses, sudden deep cuts in the losses. Those kind of things are possible. So Sortino ratio, if we are having a number more than 1, it's a good number. Anything more than 2, definitely it's a very impressive strategy, particularly for a trend following system. So let me, what I'm going to do here is this, for this strategy, I'm going to convert this strategy into an option execution module. So remember carefully, it's going to be very simple. You forget the strategy part, and then you forget the strategy entry part also, entry part and then exit part also. Wow, rest everything, I'm going to copy it over here. Yeah, I'm going to copy it. I'm going to copy this module. And I'll go back to the previous code which I had opened up. So I had opened that super trend futures to options, right? Now I'll open the same code. Now instead of super trend, this is going to be an half trend strategy. I'm going to fit in, instead of super trend, I'm going to fit half trend strategy over here. So I'll do what? I'll scroll down. I'll go to the the block 3, which is the module for strategy. So here is the block 3 module. I replace this complete module with half trend. Right? You replace this module completely with half trend. And a couple of more important settings we need to do, because a lot of places I would have mentioned like super trend, particularly in the section strategy section, I would have mentioned like super trend futures. So I'll say like, instead I'll say like half trend. The half trend strategy, give a name to that. Half trend futures to options module. And then again here, strategy name, I would have mentioned like super trend strategy. Here also I'll change it to half trend strategy. So wherever the name super trend is happening, I'm just changing into half trend. Okay. So I'll open the code. I'll put it in a new code over here. I'll paste this. I'll save the code. I'm going to save the code as a separate module. I'm going to say like before to that, I'm going to save like Feb 22, day 11, half trend futures to options module. So now I'll save it. Now this strategy is capable of executing the same thing what we discussed. It's a half trend based strategy, whereas in this half trend, when the buy signal is going to happen, instead of punching in futures, it's going to punch in options module. So that is what it's going to do here. And so here is the strategy. So let me remove this. I'll add the code, add to the chart. So more or less, you'll be getting a similar equity curve. It's the same equity curve is what we're going to get. Equity curve should not change at all. Instead of buy sell signal, we'll be getting a long call, long put, like exit call, exit put. That this is the kind of information we want to get over here. And finally, when it comes to automation, it's going to be very simple. I have to go and configure it. Generally, I prefer using an offset of -4 and -4. That is 4 strike wide on the call option and 4 strike wide on the put option, in the money option, which is approximately considered as a closer to the futures. It's not exactly futures, but it is better than futures in terms of risk. And I'm going to set the quantity in terms of lot size. And the best part is I have to set the API key and API secret key. Let me also go back and get the API key and API secret key as well. So I'll show you how to set the alert. So it's the most easiest one. So I'll get the API key. And I'll get the API secret key. And ultimately, let's say 29 September 22, 29 SCP 22. Okay. And if I want to use for at the money calculation, this is used primarily for at the money calculation only. If I need a future symbol, I can still go and select from here and I can select Nifty futures. So at the money options will calculate it based on the NSE futures itself. If I want to calculate based on spot, it's fine. I can go back and type Nifty, simply Nifty, and select only the spot. Ensure that it is indexed, not from futures. Select the index of Nifty 50 so that it selects the Nifty spot instrument. And you can scroll to that particular values. If in case we are using Bank Nifty, you have to change the lot size as well. Lot size and strike interval, everything you have to change. Since it is Nifty, I don't need to do any of the changes. And the backtesting month and from date has to be set. It is going to be 7 and year has to be set like 22. So let's say if I want to start from tomorrow onwards, so then I have to enter tomorrow's date. So that today, none of the signals will happen. From tomorrow onwards, fresh signals will start occurring over here. Well, and if in case we want intraday control, can enable it. If you don't want, it will be running like a positional one. And similarly, stop loss control also. If it is required, one can go and keep those controls. Now, once everything is done, press OK. And then create the alert. Again, creating the alert is the most important part. So click on that, add an alert. Ensure that you're using the webhook URL. And say like half trend futures to options. And ultimately, the strategy.message, this message is what we have to transmit. I'll cancel this and then I'll set the message as strategy.order.alert_message. This is a placeholder. Within the double bracket, I have to place it over here. And I'll save this. So now the alert will be entered. Now you can see that there won't be any signals at all. So tomorrow, when the market is starting, when the signal is happening for the very first time, if it is a buy signal, it will take a long call. Or if it is a sell signal, it will take a fresh long put option. So we have to ensure that no positions are getting carried forward. Tomorrow's signal is going to be the very first signal. That is how we have to set. If I am trying to trade a pure positional strategy. If it is intraday strategy, we don't need to bother about backtesting module because intraday strategies always starts with fresh positions only. If your strategy is starting with fresh position, then you don't need to worry about it. But however, if your strategy is not starting with a fresh position, definitely the backtesting settings need to be set. This is a standard we've been practicing in Algomojo as well. Always. Great. So I guess this explains the how to use the futures options module. Let me pass here. We'll come back in some other time and we'll try to discuss more interesting sessions in the upcoming future. Thank you.